What is cryptocurrency? Cryptocurrency, or crypto, is a digital currency used as an alternative payment method or as an investment. Cryptocurrencies get their name from the cryptographic techniques that enable people to buy, sell, or trade them securely without the need for a controlling authority, such as a government or financial institutions. For example, Bitcoin was developed primarily to be a form of payment that isn't controlled or distributed by a central bank. How does cryptocurrency work? Cryptocurrencies are supported by a technology known as blockchain, which maintains a tamper-resistant record of transactions and keeps track of who owns what. The use of blockchains addressed a problem faced by previous efforts to create purely digital currencies, preventing people from making copies of their holdings and attempting to spend it twice. Individual units of cryptocurrencies can be referred to as coins or tokens, depending on how they are used. Some are intended to be units of exchange for goods and services, others are stores of value, and some can be used to participate in specific software programs such as games and financial products. How are cryptocurrencies created? One common way cryptocurrencies are created is through a process known as mining, which is used by Bitcoin. Bitcoin mining can be an energy-intensive process in which computers solve complex puzzles in order to verify the authenticity of transactions on the network. As a reward, the owners of those computers can receive newly created cryptocurrency. Other cryptocurrencies use different methods to create and distribute tokens, and many have a significantly lighter environmental impact. Why are there so many kinds of cryptocurrency? It's important to remember that Bitcoin is different from cryptocurrency in general. While Bitcoin is the first and most valuable cryptocurrency, the market is large. There are more than 1.8 million different cryptocurrencies in existence, according to CoinMarketCap.com, a market research website. And while some cryptocurrencies have total market valuations in the hundreds of billions of dollars, others are obscure and essentially worthless. If you're thinking about getting into cryptocurrency, it can be helpful to start with one that is commonly traded and relatively well established in the market. Are cryptocurrencies financial securities, like stocks? Whether or not cryptocurrency is a security is a bit of a gray area right now. To back up a little, generally, a security in finance is anything that represents a value and can be traded. Stocks are securities because they represent ownership in a public company. Bonds are securities because they represent a debt owed to the bondholder, and both of these securities can be traded on public markets. Regulators are increasingly starting to signal cryptocurrencies should be regulated similarly to other securities, such as stocks and bonds. But this take is receiving pushback. Scholars, legal firms, and some of the biggest players in the crypto industry have argued against this, claiming the rules that apply to stocks and bonds, for example, don't apply as broadly to cryptocurrencies. The Securities and Exchange Commission has set its sights on the sector generally. The agency has raised concerns about activities including crypto staking, as well as the operations of some large crypto companies. Are NFTs cryptocurrencies? NFTs, or non-fungible tokens, are digital assets that convey ownership of what could be considered an original copy of a digital file. They share many similarities with cryptocurrencies, and they can be bought and sold in many of the same marketplaces. However, NFTs are different from cryptocurrencies due to that unwieldy word in their name, non-fungible. Cryptocurrencies are fungible. So any unit of a specific cryptocurrency is basically the same as any other. My one Bitcoin has the same value as your one Bitcoin. Your decision: is cryptocurrency a good investment? Cryptocurrency is a relatively risky investment, no matter which way you slice it. Generally speaking, high-risk investments should make up a small part of your overall portfolio. One common guideline is no more than 10%. You may want to look first to shore up your retirement savings, pay off debt, or invest in less volatile funds made up of stocks and bonds. There are other ways to manage risk within your crypto portfolio, such as by diversifying the range of cryptocurrencies that you buy. Crypto assets may rise and fall at different rates, and over different time periods, so by investing in several different products you can insulate yourself, to some degree, from losses in one of your holdings. Perhaps the most important thing when investing in anything is to do your homework. This is particularly important when it comes to cryptocurrencies, which are often linked to a specific technological product that is being developed or rolled out. When you buy a stock, it is linked to a company that is subject to well-defined financial reporting requirements, which can give you a sense of its prospects. Cryptocurrencies, on the other hand, are more loosely regulated in the US, so discerning which projects are viable can be even more challenging. If you have a financial advisor who is familiar with cryptocurrency, it may be worth asking for input. For beginning investors, it can also be worthwhile to examine how widely a cryptocurrency is being used. Most reputable crypto projects have publicly available metrics showing data such as how many transactions are being carried out on their platforms. If use of a cryptocurrency is growing, that may be a sign that it is establishing itself in the market. Cryptocurrencies also generally make white papers available to explain how they'll work and how they intend to distribute tokens. If you're looking to invest in less established crypto products, here are some additional questions to consider. Who's heading the project? An identifiable and well-known leader is a positive sign. Are there other major investors who are investing in it? It's a good sign if other well-known investors want a piece of the currency. Will you own a portion in the company or just currency or tokens? This distinction is important. Being a part owner means you get to participate in its earnings, you're an owner, while buying tokens simply means you're entitled to use them, like chips in a casino. Is the currency already developed, or is the company looking to raise money to develop it? The further along the product, the less risky it is. It can take a lot of work to comb through a prospectus. The more detail it has, the better your chances it's legitimate. But even legitimacy doesn't mean the currency will succeed. That's an entirely separate question, and that requires a lot of market savvy. Be sure to consider how to protect yourself from fraudsters who see cryptocurrencies as an opportunity to bilk investors. Is crypto real money? As crypto grows in popularity and adoption, it may be used more frequently for purchases. Right now, it is not recognized as real currency by the US government. However, it can be used in the same way as US fiat money in many circumstances. CoinMarketCap.